G'day and welcome to the Off-Chain Podcast. I'm your host, Don Redden, and today my co-host is Hendo Verbeek, one of the world's top quants. If you've ever wondered, what does a quantitative analyst even do? What is dark arts and what is magic and what is art and what is science? We're going to find out today. Also going to find out about the world of market making. How does it work? What is it? What isn't it? And going to be asking Hendo about how he spotted things like the Luna UST crash coming and not just avoid losing money, but even making money, profiting off of it. How did he avoid the FTX collapse? And especially today, it seems like there's black swans around every corner with Silicon Valley Bank turmoil affecting startup founders, affecting blockchain, affecting AI, affecting politics, affecting banking. How do we spot these things on the horizon? It's going to be a very interesting and wide-ranging chat, and I hope you enjoy it. Here is my guest, Hendo Verbeek. Market making is one of these things, Hendo, that people, when I speak to them, especially people who are kind of outside of technology or fintech or finance in general, they think, is this dark arts? Is this magic? What is market making? What happens? How does it work? In recent months, we've heard of very large market makers tumbling down to nothing. Before we get stuck into looking at what is market making, maybe could you tell us a little bit about yourself, Hendo? How did you get started in market making, and what brings you to, or what brought you to Artis?
Sure. So essentially, I started in traditional finance, right, as a buy-side equity quant, and ultimately saw the opportunity with crypto, got into crypto, did my own stuff, and throughout doing my own stuff and looking at projects and so on, I ended up being connected to the faculty group guys, and they saw my skill set, and it was sort of a natural match for me to start with the market making and ultimately become director of our market making arm. In regards to the first thing you mentioned, people often think that market making is this magic, and they often see the market maker as some sort of greater entity that decides on price and that decides on all these things and pumps or dumps the token. Generally speaking, that doesn't really hold any truth. I mean, sure, as a market maker, you have some influence on things, but generally speaking, market making is nothing more than providing liquidity, right? And in that sense, if we bring it back to the mere basics, then even you can be a market maker by just depositing liquidity to Uniswap and leaving it, right? Technically speaking, that is providing liquidity, so that matches the definition of market making.
Sure, but surely there are some particular skills that you have or that you've developed, or things about the way that your mind works, or skills that you have that in particular, at least give you this predisposition to succeed in this kind of area. What do you think that is, or what helps you to? I mean, you say anyone can be a market maker. I guess that's true, because anyone can literally go in and put in a buy or a sell bid and or request and make the market in that sense, but not everyone is doing billions of dollars worth of transactions.
Well, funnily enough, it all started with when I was very young, playing MMORPGs, and then most modern MMORPGs have these online markets, right? These in-game markets, and the beauty of an MMORPG is that any participant in such a market is a person that's trying to spend their free time in the most fun way possible, right? So they don't really care about being efficient or optimizing. So whenever I was playing such a game, I was naturally inclined to mostly spend my time in the online market of such a game, right? So I was barely actually playing. I was mostly trading. And that is a very, very easy thing to do, right? I'm absolutely not going to sit there and tell you that you can make serious money. You can't. But in-game money, yeah, definitely. Because everyone in such a market has a hurry, has a rush, needs to do things now because they want to have fun now. They only have one weekend, blah, blah, blah. That's where it sort of all started, right? Where I noticed that, okay, by buying certain items cheap, waiting for 8 or 12 hours and selling them more expensive, I can make in-game money. At some point, I realized that is sort of a waste of time because I didn't enjoy playing the game. I just enjoyed the markets. And that sort of was the natural disposition, I guess, from a very young age to do this. In terms of skill set, well, I am obsessed with numbers and I'm obsessed with logic, right? That is just a trait of autism, quote unquote. But I really, ever since I was a little kid, I really enjoy the logic that numbers have, right? If you have a subject in school that is languages, for example, then the correct answer isn't really defined, right? Any answer can technically be correct, and there's no one correct answer. Whereas when you're working with numbers and especially mathematics, there's one correct answer. There's one applicable answer, and tying numbers and data analysis and code together, because my dad worked in IT at a very early in the IT space, so I was always sort of I always had this preference for writing code and him explaining it, and tying all of that together, makes it really easy to be a quant. And once you are a quant, it becomes really easy to be a market maker essentially, or to try and prefer extracting money from the markets through market making.
Okay, so explain what is a quant. What does that mean? How is it involved in market making?
So a quantitative trader or developer uses numbers and mostly data to sort of construct a thesis surrounding a market, right? So to sort of try and make a very simple example here, if I look at the average daily gain of Bitcoin on a particular day in the week, then usually we see that Mondays and Wednesdays are a bit better, right? They are a bit more green on average than Tuesdays or Thursdays. So at that point, you could say, okay, hypothetically speaking, I can buy every Wednesday because I've done the data analysis and I know that historically speaking, Wednesday is a day on which Bitcoin performs better than on Thursday. Okay, fine. And then, from that, you can construct a thesis and try and trade it, right? Because essentially, the baseline of being a quant or a quantitative trader / developer is that you believe that whatever happened in the past continues in the future to some reasonable extent.
Okay, so simple as that.
For the sake of the example, yes. Obviously, you can make that as complex as you want, right? A very famous story in the past is a guy who used satellite images to count the amount of cars on a particular parking lot, and use the amount of cars on a particular parking lot to sort of calculate how the company was doing, right? So, for example, if there were 10 cars in the parking lot on day one and only 5 on day two, then you can reasonably expect that the company is doing layoffs and doing worse, right? And he was using that data to construct theses about trying to short particular companies, right? So essentially anything that can be done with data is sort of quantitative and then falls under the general label. The example I made about buying on Wednesday is very simple, and the example about analyzing satellite pictures to count the amount of cars is very complex. But anything in between is quantitative analysis and falls under what we're discussing here today.
All right, so about a year ago, the markets in Web3 in particular, and just equities generally, were doing okay, probably past the peak, but hadn't really hit there was no falling knives just yet. And you, in some of the groups that I'm in, started saying things like, hey guys, you got to watch out for Luna and UST in particular, because this is a house of cards that's about to come tumbling down. And very few people would actually listen. And so me hearing you say that and trusting you because I've seen you at work, over a number of years, trying to help friends of mine without giving you financial advice, obviously, saying, hey guys, this again is a house of cards about to come down. Very, for me at least, on the inside, reminiscent of that movie from a few years ago, The Big Short, based one of the storylines at least on Dr. Michael Burry there, who shorted the housing market over in the United States, which people thought, no, this is awesome, this is amazing, this is untouchable, and then shabam, it went down. How did you see that coming?
To some extent, I've always found it really interesting that I was one of few that saw the Luna thing coming, right? By all logic, it was a Ponzi, right? You can't argue with that logic. I mean, you needed people to keep buying to keep the system afloat, right? And especially the moment you say, okay, well, fine, we pay 20% API on your deposits in our particular stablecoin that is backed by, Luna. At that point, immediately a bell starts ringing, and then the only real question that remains is, okay, I got to position myself accordingly for that, but I got to make sure that I can't be, or I can't get blown out, because that is how anyone that found out that Luna was, a Ponzi, or at least had noticed it. Most of those people still ended up losing, because obviously Luna itself, the token, which is now Luna Classic, that kept pumping, right? Because as long as participation was increasing, then that token kept going up, and that is sort of the issue that I always saw. Like, okay, the longer Luna goes up, and the longer, or the bigger UST grows, the bigger the exit gate needs to be to ultimately also all get out of it safely. And especially towards the end of it, towards the last, I'd say 2-3 months, when I really started posting about it, the exit gate wasn't nearly big enough. And at that point, you only need panic for the Ponzi, quote unquote, to collapse.
Right. So pretty classic Ponzi on the horizon. But you noticed it, but other people didn't notice it.
Yeah, I mean, I think it's also a result of people not wanting to see it, right? There's this, human being, right, that is looked up to by many other human beings, and everyone respects that particular person. And then you're seeing these massive echo groups of equally clever people that are also, cheering him on. And then at some point, it becomes difficult to believe that it's still a Ponzi, right? At some point, you're going to ask yourself, okay, maybe this actually is something. And the only real distinction in that particular sense between me and other people is the fact that I never fell for that belief, right? Sure, I asked myself, okay, maybe it is something. And then again, I opened up the white paper and I looked at the numbers, and I was, okay, no, this is still a Ponzi, right? We can't all safely get out if we have to, assuming there was some form of panic. And then again, as I said, the only real construct that remained from that point forward is, okay, how do I capitalize on this, right? Because I couldn't short Luna, because there was still, especially when I started to try and capitalize on it, there was still, quote unquote, infinite upside on Luna, right? It could have easily went 100% from where I started shorting. I'm not going to put up infinite collateral. So then the secondary idea was, okay, I can't short Luna because it can keep going up, and I'm like almost anyone, I'm not made for timing the market, right? That is still some reasonable guesstimating. So then there was, okay, how am I going to do that? And the sort of, I wouldn't even say genius moment, but then the best idea I had was, okay, I can just short a stablecoin, right? Hypothetically speaking, the stablecoin can only go to $1, right? It by any logic will never go to $1.50. So my short will, by all logic, never be underwater. The only thing that is risky is let us say, essentially interest that I had to pay on the short, right? Because they are paying 20% interest on to holders of the stablecoin. So if you want to short it, you're technically speaking sort of paying the same. That was the only thing I really had to time. And then, especially when the entire market was going down ever so slightly, then it becomes much easier to think, okay, there's some liquidity moving out of crypto. So if I time my short here, then by any logic, the stablecoin won't go up, or it won't be at $1 for the next 5 years. So there's a reasonable assumption of profit, right? And when we're talking about these opportunities don't come often, right? These kind of things don't happen monthly. But whenever there's such an evident way of making money, you sort of have to use everything you got to capitalize on it, and that's what I did, right? I used the majority of my net worth on that short, and that is also, sort of what made me famous, obviously within the group for doing that and standing behind it.
Yeah, awesome, man. So you've mentioned before, this was the genius move. One of the things that coming into Web3 generally, and one of the things that I recognized pretty much immediately was this, and it's certainly very evident in the faculty group, but generally in crypto, that the geniuses like the ratio of geniuses to, let's say, non-geniuses is about as high as I've ever experienced. And yet there are still plays like this play that you did with UST in particular that stands out even amongst the people who, are not just highly intelligent, but highly skilled, highly experienced in this kind of arena. Can you, maybe if we bring this back to market making again, how do those kinds of maybe X factor kind of or unique skills translate into proficiency in market making? How does artists stand out amongst market makers?
Essentially, it's a very competitive playing field, right?
Yeah.
Trading by any logic is competitive because no one is trading for fun, right? No one likes the concept of just sitting in front of a computer and trying to extract money, and no one does it for fun, right? We're all there for profit in one way or another. So you start off with the basic assumption of, okay, fine. If everyone's in it for the money, then how am I better or how am I different? And there's many ways to be different, right? For example, if we go back to the Luna thing, just for the example, on that particular thing, my edge over other people was the fact that I was willing to carry the risk, right? I was willing to pay the funding for the short. Most people weren't. Same with market making, right? You have to have an edge in one particular angle. And, some market makers take that by market making on their own exchange, right? Alameda being a prime example. That is an edge, even though they blew it, they made a lot of money doing it. And that is sort of what you're always looking at, right? Like, compared to all the other participants in the market, what can I do that they can't do? And one of the things with artists that we can do that most others can't do is we have an insanely long breath, essentially. We can go on where others are forced to stop, and we do that through being very risk averse, right? So in 2022, most market makers suffered significantly. We didn't, because we were very risk averse and we weren't really risk on at that point. On the other hand, obviously, I'm not going to claim here that we were geniuses and just sorted the market and that was everything. On the same sort of note, throughout the bull market, we didn't make the same amount of money that other market makers made because we weren't super risk on, right? So that is an example of an inherent edge of us doing something completely different than others. And that is sort of what you have to look at, right? Like, okay, sure, there's some competing you can do on technicals and software, right? You can be faster than the other guy. Your algorithm can be a bit better than the other guy to some extent. But generally speaking, you want your outperformance to come from something that others won't do. And we sort of knew that everyone was going to be risk on by all logic because everything was going up and everything would go up until infinity. And so by logic, we also knew that others were overexposed once it did start coming down. And all we did in that sense is just not being overexposed during the bull market, and therefore we were not overexposed during the bear market, quote unquote.
Yeah, right. I mean, you mentioned FTX in there as well. Again, famously, perhaps, maybe in smaller circles, famously, you were very bearish on them, or at least very. Very keen to, how do you put it delicately, that they weren't necessarily the most above board of players in the space. How can you tell that from a market making perspective?
That's a really funny story, but in the very beginning of Artis, we had a particular client that was listed on FTX. And I'm not going to specify too much details because I'm definitely not going to name them or give any information that could name them. But they were, in touch with FTX, and ultimately they told FTX, okay, we want to hire our own market maker, which was Artis, and we don't want Alameda to market make it. Okay, sure. FTX was okay with that to some extent. And obviously, once we were market making it, we still saw Alameda in the books, which is interesting, considering that the client explicitly asked not to. But it's a free market, and you can't you can't really tell someone to not do it. But at that point, we told the client, in all honesty, that given that Alameda was providing liquidity, there wasn't really a reason for us to, on top of that, be there. Sure, we're happy to compete, but it wasn't in the client's best interest for us to also be there. So he said, okay, at this point, you might as well sign on with Alameda. And they were like, okay, sure, fine. And we told them, okay, we're happy to sort of stay on as advisors. And they agreed with that. Us being advisors meant that we got to see the agreement of market making that Alameda drafted up. And ever since that point, ever since seeing that agreement and the way Alameda worked, I essentially was very bearish on them as a market maker. And obviously, everything here has sort of passed, and Alameda in its current form is absolutely not going to sue me for disclosing how that contract looked. But that contract sort of contained a term which allowed them to borrow tokens from the project. And at the end of the term, they were forced to pay that absolute token amount back. Now, if you're a bit market savvy, you will understand that if I borrow tokens from someone and I only have to pay the tokens back after a year, then by all logic, it makes me a lot of money if I manage to sell all the tokens at the current price, and a year later the price is only 50% of what it is now. That means I have made 50% in USD. And the funny part was, in that agreement, the financial compensation was zero. So all they wanted was to borrow tokens and pay them back a year later, and they didn't want any other money. So by all logic, I was like, okay, they are going to make money. They have to make money. They don't do this for fun. Neither do I do it for fun. No one does it for fun. So if they have to make money, and the agreement specifies nothing that makes money, except them being able to borrow tokens and pay them back exactly a year later, then they have to sell the asset down to make that happen. And, we told that to the clients, but the client was relatively happy with the fact that they didn't have to pay Alameda anything. And they were like, yeah, no, we're still going to do it. Okay, fine. They ended up doing it. Token was trading 70% lower over the course of a year, even though we're in this flying bull market, or at least the start of the flying bull market. And I was like, okay, yeah, if that's how you want to be a market maker, right? If you want to provide liquidity only for you to be placed in a position of advantage because you can force the token down, and you can do that on your own internal exchange where no one can really check if everything you're selling is actually backed by assets, right? I'm not saying they did that, but you couldn't check.
Yeah.
Those two things made me very wary of Alameda as a whole. Sure, I traded on FTX. I don't think anyone didn't, or at least anyone that does this for a living has used FTX. But Artis itself, right, the market making company, had zero exposure because of things like this.
You're right. So if you look over the scope of a year, you said you missed some of the cream of the bull market, but still very profitable and very profitable for your clients. But you missed a lot of the downside of the bear because of not the risk aversion, but just because of being smart. But those two key moments in crypto, shall we say, in 2022, being Luna UST, and you could even say that FTX Alameda was still part of the ongoing fallout from Luna UST, implosion. But you either saw them both coming, or Artis was unaffected by them because of what? Just seeing things that other people didn't see, knowing things other people didn't know, being smarter than other people, playing the game better than other people. Is there a thing that you can distill it down to?
Well, I would love to sit here and tell you that we are just very good at the game and all the others suck, right? Reality is that isn't true, right? There's only so good you can be at the game, and anything on top sort of very quickly gets attributed to luck. So I'm not necessarily going to claim that we were better at the game. The only thing that we really did different was having very, very, very strict risk measurements in place, right? Like especially in terms of exposure, and in terms of being a risk on. Right, a lot of companies in crypto are naturally a risk on. Right, they are naturally long Bitcoin, they are naturally long Ethereum, which sort of is leverage already because you're a crypto company, right? So your success is already tied to the success of crypto. So there's absolutely no need to also have your entire treasury in a risk on asset. Because if crypto goes well, your company grows. If crypto goes bad, your company shrinks and the value of your treasury goes down because you're naturally long crypto. So we avoided being naturally long in the first place, right? Sure, we have some longs in position. Sure, we're holding some Bitcoin. Sure, we're holding some Ethereum. Sure, we're holding a lot of client tokens. But we avoided being naturally long. So that is one thing. And the secondary thing is just being very vigilant with on-chain stuff. Right? The moment we're seeing withdrawals coming from an exchange, especially if it's bigger withdrawals, we're like, okay, sure, let's preemptively halve our exposure to the exchange, and then a week later we can always review if that was good or not. And that especially saved our ass on FTX. We were out very early, and obviously the same doesn't apply with Luna, right? Like Luna was just us holding no exposure to Luna because we were always under the assumption that it was a Ponzi and it was going to go down at some point, and the fallout was going to be massive. So we were especially not naturally long during during certain developments like that. But yeah, as you said yourself as well, the downside of that is that the months leading up to Luna getting that big, we were also not exposed to it, but we were also not exposed to the upside that the market made during the months leading up to it, right? So you sort of always pay a price, but ultimately at this point, I'm really happy that we paid the price in that particular angle.
Yeah, yeah, for sure. Okay, so crystal balling the next 6 months in crypto in particular, where are we headed? What's it looking like?
It is probably going to be really boring.
Okay.
And the bull market is sort of phases, right? You have the phase of, okay, we're dying, right? Everything goes to zero, and layoffs and projects that die and Ponzi's that fall off, and sure, all of that happened. Then you sort of have the period of, okay, we're now here. It doesn't really go down anymore, but it doesn't go up either. And no real developments, no narratives, no nothing. Everyone's just keeping their heads down, and trading is not really that interesting. I think we're sort of in that phase, right, where we probably won't go down anymore, or not down anymore, but we won't go down a lot anymore.
Yeah.
But consecutively, we will probably not go up that much anymore for at least Q2, Q3 this year. If at some point Q2, Q3 gets better also from having less macro headwind, then we should definitely set up for the start of at least a good looking market. But I don't necessarily think that we should be thinking of bull market in 2023. And we should also probably not think about having a lot more pain to suffer from, right? The pain we're going to suffer at this point is the pain of nothing happening, right? Your entire portfolio being completely stable for months, and you contemplating with yourself, like, okay, is this the time that I'm going to exit crypto and go to real estate, or is this the time that I'm finally going to invest everything in the S&P 500 and just leave it for what it is? That is sort of the difficulty of this phase, right? Just nothing happening.
So I see it a bit differently to that. So nothing happening for sure in terms of the markets. So we're definitely not in a bull market. We're probably, like I said, not so much in a bear as such, because we're not probably going to go much further down if we do go down, just chopping around. But given all of the reduction in force, the layoffs, and different projects that have gone bust or lost funding or haven't been able to raise subsequent rounds, those kinds of things, with the sheer volume of talent out there, this is, I think, going to be one of the most exciting times of building that we've had in maybe a decade, because the Ponzi's come out in the bull markets where there's liberal quantities of cash floating around, and it's very easy to kind of rise to the top with just a little bit of hype, versus now where if you need to find a co-founder, there are heaps of potential co-founders out there. You need to find a new CTO or a new COO or another developer, all those kinds of things. People are out there and hungry, and so I think potentially the market's absolutely boring. So maybe from a market making perspective, like you said, the portfolio side of things perhaps, but the time to build, man, we got to be in one of the most exciting times to build that I can remember.
Yeah, no, I fully agree there. Right, there's a big difference between people who trade and people who build. And generally speaking, most crypto participants are investors. If you can call them that. So, most people that are taking interest will want to know, what's going to happen to the market. But in that sense, I agree with the fact that for building merely, it is probably the best time, right? Like on a very holistic scale, ideally you would have raised during the bull, and you're now building it with a very long runway.
Yes.
Assuming that most people can't really start that sort of thesis at this point. Sure, like it's an awesome time to be a builder, and it's an awesome time to inform yourself about what could be new narratives, where we're going to go, how we're going to go there, why. Sure, right? So it's an awesome time to be in crypto. But in terms of market and your portfolio, no, I don't see a lot of action till the end of this year.
Yeah. Before we go, you don't just sit at a computer all day. You have some outside interests, one of those being cars in general. If you're happy to chat about it, maybe tell us a little bit about kind of what floats your boat in terms of automobiles and what are you rocking at the moment?
A lot at this point. I have a Lamborghini Aventador. I have a AMG GTR, and I have a Brabus S-Class. That is not too interesting. Like I'm happy with them, obviously, but
I have it on good authority. There are certain colors that don't really count as Lambos.
Oh, yeah. Okay, fair. Yeah, internally in the company, I'm known for quote unquote shitting on any Lamborghini Huracan, right? Because they are quote unquote the working man's Lambo, and not the real one where the doors go up. So I'm sort of known for that. Majority of time that I do spend on cars is actually, funnily enough, used to drive sick and handicapped kids around. Sort of give them the potentially last time that they could really have fun. So that is, how I'm using most of them, because obviously the markets are consuming most of my time. But yeah, I'm famously known for shitting on working man Lambos, and that's also why I don't have the working man's version, right? Like.
Oh man, maybe tell us a little bit about how you got involved with the sick children you were talking about before, and what does that look like for you?
Sure. So one of the towns I used to live when I was a little kid had this giant event where essentially they would just organize an entire day, and it was a big party in the town itself, and then as a sort of closer of the party, there would be all these guys with sport cars. And all these sick children, they would match them up, and they would drive a very big circle around the town and blah blah blah. And I would always spectate it as a little kid, and I would always think, like maybe one day I can be that kind of guy. And that's sort of where the idea originated from. And when I had enough money to buy 20 Lambos, I bought my first one, which was a working man's Lambo, right? Like was a cheap Gallardo. So and ultimately. Ultimately, I traded that in for a real man's version. And yeah, no, like I think money is cool, right? Absolutely. I mean, I wouldn't be here if money wasn't cool. But it's very cool to be able to give back with the money, right? And ultimately, you can only spend so much by yourself, right? Like we discussed this in the past as well, but it's and I'm just gonna throw a random number here, right? Anywhere from 5 million upwards. Crypto Twitter will tell you that 5 million isn't even enough to like live a year on. But anywhere from 5 million up, it's like it becomes difficult to spend, right? Sure, you can buy a mansion, and sure you can buy 10 Lambos, but if you have one dream car and one dream house and couple properties to rent out, you're sort of there, right? Like sure, you can think about wanting 50 million or 100 million and having a yacht and blah blah blah. But generally speaking, I think you're maxed out of the utility of wealth quite quickly, and at that point it becomes more of a game of, okay, I have these resources, what can I do with them that changes a lot for another human being, but barely changes anything for me, right? Driving a day in my Lambo is, say $500 all in all, gas, maintenance, blah, 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 and the car devaluing. And that $500 for the little kid that I'm driving around is like one of the biggest days they ever experience. So, I think that's a much better trade than trying to be stingy and saving up more and trying to continuously reinvest, right? The utility of wealth is very logarithmic.
Yeah, man. And I totally agree. I really enjoy the challenge and the fun and the game of building and investing and trading and those kinds of things. But at the end of the day, money really is a tool and can be used to do some legitimate good in the world. And so, man, I'm just really encouraged to hear you talk like that, really. I mean, for someone for whom, like you, making money, I'm not saying it comes easy, but you have this natural proclivity, perhaps, or just the way that your mind is worked, the mind is wired and works to be able to be very successful in terms of making money. So yeah, man, I just want to encourage you in that. That's really a great thing to pursue in the future. All right, last word then. What's your advice, if you could have advice, hashtag not financial advice, for somebody who is looking at crypto markets now and thinking, okay, Hendo says we're near the bottom. Might be time to start having a little bit of a play, like dipping my toe in the pond or, going all the way in. What's your advice to somebody new to crypto?
I think generally speaking, on a first note, like, do not underestimate the value of having income, right? There's all these, and that's really funny to me. It's like, can I go to YouTube and watch a 5-hour course and be a doctor? No, I probably can't. So why would you go to YouTube and watch a 5-hour course and be a day trader? You can't, right? Like, you're competing with guys that don't sleep, that are doing this for 5 years consecutive. Like, so forget the whole day trading idea and forget the whole I want to be in the market continuously. Forget that. Just maximize the income you have, right? Do a side hustle. I don't mind, right? Anything that's quote unquote internet money. Just make sure you make money. And in the meantime, invest the majority of it, right? And make sure that the investing you're doing is not costing you a lot of time, right? If your net worth is 10K and you manage to squeeze out, I don't know, 50% a year, right? That is insane. But presume you do. Presume you make 50% a year. You've now made 5K. If that took you 1,000 hours to make happen, it's like, okay, good. Like, that's $5 an hour. That's absolutely not worth it. So, like, make sure that the investing you're doing isn't consuming a lot of time and focus on income, right? Once you have 500K, that's a completely different discussion. But especially if you're watching this and, you're, I wouldn't say normal, but your net worth is not outstanding, then, just focus on actually making money before you think of stuff like day trading or investing. Because, day trading and trading options and whatnot, you're quote unquote gambling against guys like me. And I'm not saying that I'm some sort of god, but I lose significantly less than you, and I stand significantly less to lose, right? Like, even if I lost everything I had in crypto, my life doesn't materialistically change. And we have an entire firm running software against you to sort of compute what we think is the best trade to take. And if you take liquidity from us, be damn sure that we knew why you were getting it, and always take that into consideration when you contemplate day trading or active investing or whatnot. Investing is a tool to make sure you make money without investing too much effort. The moment you're going to invest too much effort into investing, you're not really an investor anymore.
Right. And then when you get the money, don't buy the poor man's hurricane.
That's a very good conclusion, yes.
All right. So if someone wants to find you online or wants more info about artists and market making, how can they find you?
So we have one website, that's artist.systems, which is a really cool URL. I really like it. Beyond that, I am practically invisible online, and that will always be the case.
Thanks for joining us for the Off-Chain podcast. Still to come this season, we're going to be speaking with one of the world's top artificial intelligence experts, someone from the world of venture capital. So if you've ever wondered how VC works, we're going to find out. Going to be speaking with people from the entertainment industry, from movies and art and music in particular, finding out how AI is affecting IP, how blockchain is revolutionizing, or at least attempting to revolutionize how the music industry works, and much, much more. So join us again for the Off-Chain podcast, brought to you by Faculty Group.